Hello and welcome to the first Policy Exchange webinar, I think I'm right in saying. I am Juliet Samuel. I'm a columnist with The Telegraph, and I'm also a senior fellow at Policy Exchange. So we have a very eminent panel lined up to discuss what is probably an unprecedented economic crisis, one we're going to be going through the panel. First, we'll hear from Gerard Lyons, and I'm going to introduce everyone in turn. He's the former chief economist of Standard Chartered, former advisor to Boris Johnson. He's also on the board of the Bank of China, and he is also a senior fellow at Policy Exchange. We'll then hear from Mervyn King, former governor of the Bank of England and author of a book coming out very soon. I think maybe it's out already, called Radical Uncertainty, Decision-Making Beyond the Numbers. And then we'll hear from Nick Macpherson, the former permanent secretary of the Treasury, and Alistair Darling, former Chancellor. These three of these speakers obviously were actually at the helm during the 2008 crisis. And so it will be very interesting to hear how they think the government and policymakers should be handling this crisis, and also as to whether this crisis is in fact going to be bigger than the one that we went through just over 10 years ago. And in fact, I was looking at forecasts recently made by Deutsche Bank, and they are predicting the third largest contraction in UK GDP in the last 100 years. They're predicting a 6.5% drop in GDP versus 2009, which was 4.2%. So are we staring down the barrel of a recession, possibly even a depression that is worse than 2008? And as we go through it, how are policymakers going to be able to manage it? Because we've been hearing for at least 5 years that central banks are out of ammunition. And we've also been hearing in the last 2 weeks the word temporary quite a lot, especially from politicians who are trying to stem the crisis, that this is a temporary hitch and everything will at some point bounce back to normal. So there's a question as to whether that's true, and even if it is temporary, are the knock-on effects also going to be temporary? And certainly the fiscal backdrop will be totally different when we do come out of this. And the question of whether we will be in a scenario that is actually rather like a post-World War II scenario where taxes have to shoot up to compensate for the enormous fiscal outlay that has got us through the crisis, and whether business structures will have to change, whether there will be questions over certain business models to do with supply chains that span the world. Anyway, we are now going to go to our panelists to discuss all of that and lots of other things, I'm sure. And we're going to start with Gerard Lyons, who's a senior fellow at Policy Exchange.
Good morning. Let me go through three areas. First, the problem we have. Second, about policy in broad terms, and then some specific measures. The backdrop in my mind is where I'm constructive about the UK government's approach, although I think they've made it too complex and not simple enough. And maybe the three words that I would use that I think need to justify policy here and globally is that policy needs to be unconventional, unlimited, and a sense of urgency about what needs to be done. First, the scale of the problem. Juliet, you mentioned 2008-09. There are some similarities with the global financial crisis, although at that time, the global financial crisis, when I was heading up Standard Chartered Research, was viewed as a Western financial crisis. But the similarities are that just as then we had to overcome the key problem in the financial sector to become more optimistic about the economic outlook, now we have to address the key issue in the health side to become genuinely optimistic about the economic outlook. But like then as now, there needs to be two strands to policy. Then it was financial and macro, now it's health and macro. And also then, as now, the policy response needs to be significant. I would say it's been quicker now, although markets have reacted quicker now. Although maybe the big difference with 2008 is I felt in 2008, the global response was quite significant and coordinated. Now, even though there is a response internationally, countries are doing things more on their own. and I thought the G20 ahead of the real escalation of this crisis was wanting. The real issue in terms of the problem, though, is that if we think globally, it's the letters LUV. Early this year, it looked in the eyes of the markets as if though this would be a V-shaped economic impact down, then recovering relatively quickly. Now, at the best, it looks like to be a U, standstill in Asia in Q1, although tentative signs of recovery there now. Of recession, deep recession in Europe, UK, and US in Q2, and likely at best a recovery in the fourth quarter. What we need to avoid is that L. And while there's no ideal policy response, different people have different views as to what needs to be done, I think there is agreement on the scale of the problem. It's a collapse in demand and income. Therefore, we need to actually ensure that events do not feed on themselves. So the policy needs to be to minimize, and the policy here and globally, to minimize and offset that lost income and demand, to provide liquidity and ensure financial stability, and to ensure also that the hit to the supply side of the economy is temporary and not permanent. And that leads on to the policy approach. I'm not going to focus on the health side, but on the macroeconomic policy side, it's quite clear here in the UK that we need a whole of government approach. That's monetary policy, fiscal policy, financial and regulatory policy. We shouldn't kid ourselves that we're able to quantify the scale of the hit about to befall us, but in qualitative terms, as I've touched on, we can identify where the problems lie. Now, the Chancellor has moved from talking about the 3 T's to the 3 C's. He said policy initially was going to be timely, targeted, and temporary. The T he missed, I thought, was titanic, the scale of the measures. And I think he's now doing things to address that. He then moved on to calling policy the 3 C's, coherent, coordinated, and comprehensive. But the other C that could be added is that policy was maybe too complex, too many thresholds, too many delays. But overall, I think he has done a good job. But the route he's now gone down is very hard to reverse. No reason why he should reverse having gone down this route. But there are still clear gaps in the way that need to be filled. Now, on to the specifics in terms of what needs to be done from here. As I say, I'm positive about what has been done in many respects. But if we think of 3 different aspects of the pyramid: individuals, companies, and the financial sector. In terms of individuals, the Chancellor, I think, needs to still do more in terms of providing help to those people in work. At Policy Exchange report last week, we suggested 100%, not 80% of income being given. But for those self-employed, the delay was a problem. He might not be able to do anything about it, but he needs to actually reduce the complexity that's impacting the self-employed. In terms of maybe therefore the best route he can do is more resources to universal credit and actually improving or increase the amount available. In terms of the corporate sector, there are things that need to be done to fill the gaps. What we do not want to do is to burden the corporate sector with more debt. Therefore, ideally, as this is a temporary crisis and we want as many firms to come out of this still in as good shape as possible, it's from the government side directing more grants to firms. The initial 330 billion loan facility sounded sizable, but what became clear was that the threshold made it only available to investment grade. So on the corporate side, there are still things that need to be done. But 2 perennial problems have come to the fore in the last few weeks talking to people. One is that big companies are still not paying their suppliers quickly enough. That's an issue in good times, never mind difficult times. And also what's quite clear, and the papers are full of this, is that the banks have not been fully engaged in these government schemes and need to be. Let me move on to, having talked about individuals and corporates, the other area is the monetary financial side. There, I think the Bank of England has done a lot. And I think, again, like with government aspects of policy, more still needs to be done. Short-term rates are low. I would actually encourage the Bank of England to focus on pegs and regs, pegging and regulation. I feel that 10-year yield should be pegged as close to 0 as possible, as the Americans did at the Fed in the 40s, as the Bank of Japan has done here recently. Regulatory policy has already been eased to ease requirements on capital, and I think maybe more needs to be done there. But quite clearly, it's about ensuring enough liquidity and financial stability. The Bank of England also needs to work closely with the government to see why it is that money is not getting to the corporate sector as quickly or as easily as possible. And finally, on the bank side, there's much talk about a magic money tree. I don't think there is a magic money tree. The government, through the Debt Management Office, can fund its debt. But at the same time, I feel that the Bank of England, through expanding its QE, and that's the right thing to do, should be buying more government debt, either indirectly through the market as it does now, or more directly from the government itself. And maybe just to conclude, overall, just as the government's moved to enhance communication in recent weeks, one of the thoughts we have at Policy Exchange is that we should enhance communication even further on the macro side. Updates on usage of these schemes, on the various economic packages, how they are working, how they are helping the economy. And post-crisis is about having a robust health system. But on the economic side, I think there are areas that we can look at in the future in terms of nominal GDP targeting, reducing debt to GDP, and ensuring monetary and financial stability. But overall, good so far. The scale of the challenge, though, in my mind, means more needs to be done, unconventional, unlimited, and urgency. Thank you.
Thank you, Gerard. And one thing I forgot to mention is that we will have a Q&A. Each person is going to speak for 5 minutes, as Gerard just did. And there is a button you can press to raise your hand. We won't be taking questions during the people's talks because it makes things a little complicated online. But if you raise your hand, you will be put in the queue and we will get to questions very soon. So we're now going to hear from Lord King.
Juliet, and good morning everyone who's listening to this webinar. 5 brief points. First, comparison with 2008. There is one very important comparison, which is that we knew before the banking crisis that banking crisis could happen. And we knew before this epidemic that pandemics could happen. But in neither case did it enable us to make precise predictions as to when or where or the precise nature of the crisis that would occur. The mistake that was made before the financial crisis was to allow the banking system to run down whatever spare capacity it had in terms of its ability to acquire liquid assets or have enough equity capital to absorb losses. It was running right up against the margin. I think one of the lessons we will draw from this crisis is that in future, even though we can't predict when pandemics will come, we know that we will need greater spare capacity to bring into action when needed. Second, we must avoid bogus quantification. There's been a great deal of wish on the part of the media to have precise forecasts as to how the epidemic will develop, the likely path of the number of infections and indeed deaths, and we must avoid it. I thought Chris Whitty, Chief Medical Officer, was absolutely excellent in the beginning of this crisis when he was asked by a tabloid journalist, how many deaths will there be? And he said, we don't know. And we still don't know much about the path of this epidemic. What the models are very good at doing, and Imperial College is one of those models, is enabling us, first of all, to understand the general shape of an epidemic, which leads to the policy of trying to push down on the peak number of infections in order to ease the burden of resources on the NHS. But also equally importantly, the models are very helpful in terms of telling us what we need to find out. And what we need to find out very much is how many people in Britain have actually been infected. So there needs to be greater urgency in terms of developing the antibody tests with a large random sample of the population, because knowing how many people have actually had the virus will enable us to improve significantly the nature of the predictions we make. At present, I think we need to be very cautious about any quantitative predictions about the number of cases or indeed the length of time for which these lockdown restrictions are needed. Third, collective insurance. This is an event which no one could easily have anticipated, certainly its timing, and I don't think it makes sense, therefore, to blame anyone in the private sector. The government has decided, for good reasons, to lock down the economy. That's going to damage business. I don't think it helps to think about this in terms of words like recession or even depression. This is not something emanating from decisions of economic agents in the private sector. It's a government decision to push down on economic activity. And that means the government itself, on our behalf, collectively, has to ensure first cash flow to all businesses, large and small, and the self-employed, and secondly, compensation for the lost takings. The government needs to act as a purchaser of last resort. As Gerard said, many of the schemes that have been introduced are bold and big. I think there are still gaps, and I think it's not really enough to say that the self-employed must wait until June. I think one of the difficulties is not so much the high-level policy decisions, although I think June is too far to wait for the self-employed, but it's actually the mechanism of delivery. And Gerard mentioned banks. I think it's surprising that most bank branches are closed when we know in the financial crisis, the reason we rescued the banks was not to support the banks as such, but to support the economy as a whole. And what we now need is the banks and the people who work in the branches around the country to be there, both on the telephone and in person if necessary, to talk to businesses so that the emergency loans, which in principle are available in practice. Fourth, an exit strategy. I think this is going to become more and more urgent now. The idea that we can simply maintain this lockdown for months and months on end, according to the development of the virus, I think is unrealistic. And I think that the government needs to find an exit strategy, which is going to be gradual, and it may need to examine methods by which those people who have had the virus are able to go back, travel, and go to work. I also fear that if we maintain the lockdown for too long, there will be a rebellion against it, because an awful lot of younger people will say, well, the younger generations have suffered in the last 20 years. Why on earth is our future being put at stake in order to help prolong life expectancy of older people whose life expectancy may not be very high in any event? And the last point I'd make is that in terms of the future, what I hope will come out of this is that when we think about systems that are vital to our economy and society, then we adopt the same measures we do when we build nuclear power plants or even an aircraft. That is, we recognize that redundancy of capacity, some resilience is just as important as minimizing costs and apparently running things more efficiently. We didn't do that in the banking system before 2007-8, and we must do it now for the health service in the future. Obviously, we can't build 100 hospitals and leave them empty, but we do need better plans, I think, for ramping up the ability to provide intensive care beds and to think about the sort of resources that we will need, whatever the nature of the future crisis. So those are the key points I've made. Comparison with 2008, the need to avoid bogus quantification when we don't have the information, the fact that we need to recognize this is a time for collective insurance, the need to develop an exit strategy, and the need in future to focus not just on efficiency, but on robustness and resilience of key systems in our economy. Thank you, Juliet.
Thank you very much. And now we will hear from Lord Macpherson. Go ahead.
Yes, good morning. Look, I agree with, not for the first or last time, I agree with pretty much everything Mervyn said. And I thought Gerard made some very good points too. I think, you know, the government and the Chancellor have done a very good job so far. As others have pointed out, they're probably going to have to do more. But the critical thing on these occasions is delivering policy quickly. And my main recollection of crises is that the temptation is always perfect policy. Actually, the best can be the enemy of the good. And the critical thing, if you're getting policy interventions about 66% right, you're doing a very good job. And the critical thing from here on is to select policy interventions which make an impact quickly. And my guess is at some point we'll be using the social security system rather more actively to support those who are affected the most by this crisis, which tends to be the poorest in society. The one point I'd like to emphasise, along with Mervyn, is this issue of the exit strategy. You cannot continue in lockdown indefinitely. And I'd also like to think that just as during the war, and I'm cautious about wartime metaphors, just as during the war, you know, Beveridge was writing his report on the future of the welfare state, I hope government is actively considering how we pay for this crisis, how we come through stronger. And the critical thing there is getting the balance between taxation, borrowing, and printing money right. Needless to say, I'm quite cautious about printing too much money, but the critical thing is to have a credible plan. And also, we do need to use this crisis to good effect in terms of delivering new policies which up till now governments have found difficult to persuade the British people to adopt. So, for example, rightly raises the issue of excess capacity in the health service. I think the time has come to implement a health tax to help pay both for demographic pressures and that spare capacity. And just as Ireland used the financial crisis to good effect to reform the system of property taxation, I think, you know, there may be things we can do there too. So, of course, we've got to focus on the short term, but the shadow of this crisis is potentially great, and we need to ensure that the country gets through this with relatively sound public finances.
Thank you very much. And we're now going to hear lastly from Lord Darling.
Thank you, Juliet, and good morning to everyone. I also agree with much of what's been said by my fellow panelists, but let me start by making one point. Comparisons with what happened in 2008 are of limited value. There, we could see what the problem was. We knew how to fix it. It was expensive. It was difficult economically as well as politically, but we were able to do that. The problem we face today is really quite different. We are clearly not on top of this problem. And if I make one point, which isn't a particular economic point, and that is in relation to testing. Now, it's critical in any crisis, and you know, I've been through one or two when I was in government, that your message has clarity. And the government's message on testing simply does not have clarity at the moment. I do not know if it is their intention to go beyond testing people rightly who work for the NHS to testing the population as a whole, like they seem to be doing in Germany or South Korea. But it does seem to me that unless you know who's got this virus or who's had it and therefore is more likely to be safer to go out and about to return to work, then we're always going to be on the back foot. And I think the government really needs to be clear and tell us what is the intention so far as testing is concerned. Is it just NHS staff? Is it for the population as a whole? And if it's not for the population as a whole, how do they intend to find out who's got it and who hasn't? Which brings me on to the second point that I wanted to make. I agree with much of what the government has announced, particularly their economic measures, which the Chancellor has announced, and he has been very clear in his message, and I think that's much appreciated. But the key, again, in my experience, is it is very easy to announce a policy. It is much, much more difficult to get it delivered. Now that applies in health measures, as we're seeing, you know, the difficulties we've had with the supply of equipment and so on. But in relation to the economic measures that are announced, which are absolutely vital, particularly on wage replacement, it's relatively easy, I think, in relation to the people who are being furloughed, people whose 80% of their wages are being paid by the government. But for the self-employed, as Mervyn King has said, actually delivering this is going to take far longer than I think many people may actually have got in financial terms. And equally, the announcement made in relation to the bank facilities for individual businesses just this morning, we were hearing reports that people are finding it difficult to get access to the information they need from the banks in order to keep their businesses going. Now, it's absolutely imperative, I think, for the government to concentrate on getting that delivery right. Policy is one thing, but actually delivering it is a major part of what's needed. When you're talking about exit strategies and what might come next, one of the difficulties is, of course, we're very much in the foothills. I have my reservation about wartime analogies. It's a bit like asking in 1939, what's the world going to look like in 1945? And the answer is completely different to what you might have thought. But I do think the government is going to have to start planning now on things that can be done fairly easily, like the temporary VAT reduction, for example, which I did 10 years ago, which are very easy to administer, and they did seem to have some effect. But then there's also the bigger issues, and maybe we won't have time to touch on them today. I agree very much with what all the other panelists have said in relation to resilience. This is a classic case of something that's come upon us. It was reported a few months ago as being something that was happening in China on the other side of the world. Therefore, people noted it. But as far as I can see, they didn't do too much about it. And lots of governments have been guilty of this in the past. But we do need to make sure that we are resilient, because this won't be the last thing that will come and get us. We need capacity in the health service. We need capacity to deal with these things if people are physically not able to go to work, or they're restricted in what they can actually do. And then the second point I would make, and a general point, is that in 2009, international cooperation was absolutely critical. You had countries from all over the world working together because, frankly, they were scared stiff as to what would happen if they didn't. Now, that international cooperation, some might think, is in rather short supply at the moment. But just because one or two people perhaps won't play, it doesn't mean that others don't. And I think we need to see far more, both on the health front, because patently this is a virus that doesn't respect frontiers, but also on the economic front, because governments will need to work as never before together if we're going to get through this and rebuild our economy and the economies generally. We're never going to do that simply trying to do these things on our own.
Thank you very much. So we're now going to have some questions, and we've had some submitted ahead of time. So I'm going to start by one that has come up a few times, and that's about, well, there are several on the theme of monetary policy, and whether what we're seeing is effectively a slide into the use of modern monetary theory, and also a question as to whether we are going to get massive inflation after this crisis subsides, and what the policy developments could be after the worst of this is over and we're dealing with the aftermath. So maybe Lord King, if you want to start by answering that.
So I think the big answer is to echo what Alistair Darling has just said, which is, I don't think we're suffering from inadequate policies at central bank level. It's the implementation and delivery of the special schemes to get cash to businesses, large and small, and the self-employed, and to make sure the schemes that have already been announced actually work as intended. I don't think we're slipping into modern monetary theory, which I don't have a lot of time for because it's actually not new at all. In essence, central banks can always print more money by engaging in asset purchases. That's what we've been doing for a long while now. The issue is how much money to print. And the answer to that question depends on circumstances. When circumstances are as they were in 2008 or as they are today, it may well make a lot of sense for the central bank to print more money to deal with a bigger demand for liquidity. But as long as the central bank can reduce that or offset it in years to come, there's no reason to expect that this would feed through to higher inflation. I don't think that monetary policy today is the essence of what we need. That is something that will come into play once the epidemic comes to an end, the lockdown ends, and we can get back to normal, and then central banks can decide how to calibrate their stance of monetary policy. I don't think that's a serious challenge or an issue for us today. Whether we get inflation down the road in the future will depend on what central banks and governments together do to handle the question of the much larger amount of government debt with which we will leave this crisis. And as long as we do it sensibly and are willing to take time gradually to allow the ratio of national debt to national income to fall slowly over time, then we'll be fine. The only risk in terms of inflation would be, to use the phrase that many people have been using, fiscal dominance, which is where the government determines how much money gets printed. And I don't think there is any reason to believe that we'll go down that road. What we've seen in Britain is the Bank of England, the Treasury, regulators working extremely well and closely together, in many ways more effectively than their counterparts overseas. And after we've been through this, there's no reason to believe that the government is suddenly going to tell the Bank of England, this is what you must do to interest rates or money printing. We can revert to our normal independence of the central bank for monetary policy. But in a crisis, naturally, they all work closely together, and that's exactly what is happening now.
Okay. Do any of the others of you want to say anything on that topic?
Just briefly, Juliet, if I may, I agree with what Martin said. The most likely cause of inflationary pressures are supply constraints. You know, if we can't get fruit and vegetables out of the ground, out of the fields, into the supermarkets, prices will go up. It comes back to the point I was making earlier. It is about delivery. Now, you know, it is not beyond the wit of us, I think, to ensure that there is the labor there is the transport to get the stuff into shops and supermarkets and so on. But if we don't concentrate on delivery, we will have problems. I agree with Mervyn King, you know, that it's not monetary policy you're talking about here. I'm afraid it's just rolling up your sleeves, talking to the individuals concerned and making things happen.
Yeah, maybe if I could just very briefly say something, Juliet. I echo what's been said. In terms of the worries about inflation, etc., with any policy response, one needs to judge it in terms of the starting position and the context of the time, the problems you face. And I echo what's just been said, but it's quite clear that monetary policy has done much of the heavy lifting over the last decade. And I think going into this crisis, and indeed most people are in agreement, the next crisis, whenever it occurred, whatever it was, there was a greater scope for fiscal policy to play a bigger role. And that's what we're seeing. What is clear is that we need to have a whole of government approach in terms of consistency between monetary and fiscal policy. And in terms of exit strategies, while the inflation worry is there, as Lord King has touched on, I don't think those inflation fears need to be overstated given the likely policy response. But it also depends, as Alistair Darling just touched on the supply side. We need to ensure that as much of our supply side is protected, it's effectively in hibernation during this crisis, so we don't suddenly hit supply side constraints. But maybe the last 10 seconds is that one of the longer term problems in the UK, and it's not just true of the UK, is that in good times, we often spend too much, and maybe in good times, policy needs to be tightened more. In the sense, if one looks back to 1970, we've only had 6 years when we've had a budget surplus. Obviously, that's not the issue at the moment, but maybe when we start to return to normality, it's about trying to achieve some sort of normality wherever it may be in terms of budgetary policy and also monetary policy in the future. But I think we need to be doing as much as possible at the moment. Thank you.
Thanks. So we're now going to go to some questions, and I think the first person we're going to go to is Julian Brazier.
Julian Brazier, Chairman of Pathway Risk Management, a security company. Could I just say a long-term gain for Policy Exchange from all this business is keeping this really good new format for some of your events. My question really was, have the panel thought at all about the relationship between economic activity and mental health? Because we hear a lot, and Mervyn touched quite centrally on this, the importance of finding an exit strategy. It's not only the economic implications of all this enforced activity, it's also the health implications.
Well, can I step in, Juliet, and make one comment? And good morning, Julian. I think this is a very important point, because it's understandable that in present circumstances, the health officials focus on the broad brush of introducing the lockout in order to diminish the spread of infection. But the reason why we need to think carefully about an exit strategy and why it's urgent is that the lockdown we've introduced is itself creating damage. It can be to the mental health of these people who lose jobs, those businesses disappear. It can be to people who find it hard to get food, who are now stuck and on their own. And particularly, I think, to the younger generation for whom we have cancelled their university education. We've cancelled the exams of people at school. This is going to have a long-lasting effect on their well-being and careers. And therefore, I think it is very important that we think carefully about how we can diminish the side effects of the lockdown we've introduced. It's just not enough to talk in terms of we'll need to keep the lockdown going for so many months in order to squash down the curve. The lockdown itself is potentially damaging, and we need to balance that against the benefits of squashing down the curve. And there are ways of doing it, but we need to be very conscious of the fact that the lockdown should not be permitted to stay in place indefinitely because of the damage it will do. Not in economic terms, as you stressed, Julian, but in terms of welfare more generally, mental health, and the well-being and the future of the younger generations who are being adversely affected.
I very much agree with Mervyn on this point, and I'm going to be watching the Swedish experience closely because they have adopted a very different approach from most countries in Europe. I do think the most important thing is to maintain consent, and that also requires police forces and other agencies to act proportionately and sensibly.
It's worth remembering we're only 2 weeks into this, and when people talk about it may have to continue till June or July, that's a long way away. Now, it comes back to the point I was making earlier about testing. I've spoken, like I'm sure all of us have, to people who think they've had this virus, but they don't know, and they would like to know, because if they knew, then we could plan accordingly. They could plan accordingly. So I think the government does need to start thinking about this, and now is when they need to start thinking about it.
Our next question is from Eric Albert.
Hi, can you all hear me?
Yes.
Yep.
Yes.
Hello. Hi, I'm from Le Monde, the French newspaper. Thanks very much for organizing this very interesting seminar. I just have a quick question. I mean, Mervyn King said it's hard to ask in 1935 how the world will look like in 1939 how the world will look like in 1945. But can I try to see if you see this crisis as the great return of the state, so to speak? There is consensus now among the panel that there will be a need for more resilience in the health system. More resilience in the banking system has been put in place in the last 10 years. Britain has been always at the forefront of creating the welfare state in 45, creating privatization and liberalization in 79. Are we seeing one of those turning points now with the state coming back? And a more precise question about debt. The UK, but also Italy and France and everywhere in the Eurozone will have massive debt following this crisis. What should they do? How should they handle that? Should we start worry about the kindness of strangers, given that a lot of foreign countries, not necessarily nice foreign countries, owning a lot of debt of Western countries? Thank you.
I could offer a word since I made the point about 1939, 1945. I just say this, that I would be wary about making sweeping statements about it's all going to be different. Some things will be, some things that won't. I think there perhaps will be a recognition that governments, the state, is not just the lender of last resort and the insurer of last resort, but it may for a while be the provider of last resort. I think people would just recognize at the end of the day, only the state is big enough to do some of the things that we need today. Some things will change. You were asking, Eric, about privatization. I think the death knell of the railway franchising system has been sounded very clearly. It won't go back to what it was because patently it didn't work. the government, the state may well have to, for a while, either on its own or in partnership, we need to provide other big infrastructure, whether it's energy, whether it's sewage, whether it's airlines, I don't know. But I think there has to be a recognition, a grown-up recognition. There are some things we as individuals can do and should do and are expected to do. But there's times, actually, the reason that we have a government is to do those things we can't do, especially in times of emergency.
Yeah, Gerard, sorry. Gerard here. I was going to come in, if I may. Maybe if I could take the second part of Eric's question on debt first. It is a worry always, excuse me. But if one looks at, apologies, if one looks at the UK, we've had a number of times where debt to income ratios have really soared, usually after wars for natural reasons. But if we take the lesson after the Second World War, when debt was about 240% of GDP, now it's about 80%, likely, who knows, to go above 100%. One needs to have policies aimed at reducing it steadily over time. Nominal GDP targets, I think, would help. So it's about consistency between monetary and fiscal policy, and it's about a credible framework to actually reduce that debt over time and to do it in a consistent way. One of the benefits the UK has compared to some of the European countries that Eric mentioned in his question is the Debt Management Office here has done a fabulous job. The maturity of our debt is very long. It's about 12, 13, 14 years. Some of the countries on the continent clearly face a bigger challenge there. So it's about ensuring the markets are kept on side, but the debt challenge is there. One of the things we need to make sure out of this crisis is that we don't burden corporates and individuals with debt. The government here and elsewhere has the ability to borrow cheaply and easily, and it should take the strain. Just second, very briefly on the longer term lessons. Obviously, it depends on consumer behavior, but there are some areas where there will be a need for greater globalization on health issues, as there was on the financial issue after 2008. But there will be some deglobalization driven as much by the behavior of consumers and companies in terms of taking more activity back home. But that's a natural consequence. But some of the longer term global trends we saw in place before this crisis, the fourth industrial revolution, the emergence of the Indo-Pacific region, those will still remain in place. It's about the UK having stability and policy at home, but still positioning itself globally as well. Globalization will still be there in some key areas, but deglobalization will be evident, as much driven by consumer and corporate behavior as well.
Thanks. And I would like to hear at least Nick Macpherson's answer to the idea that the role of the state, that it will be owning all our railways, our water, and carrying a huge debt burden, whether that's a permanent change and if it's a problem.
Well, on the face of it, we are going to see some change. Alistair mentioned the railways. I don't see how the franchise system can survive this crisis. The state may end up owning a few airlines, and the sheer cost of this crisis is going to result in a lot more debt. So we are going to have to tax people more. In the end, this has to be paid for in one way or another. But ultimately, there's a choice. There's a sort of approach after the Napoleonic Wars, where effectively the debt was paid for by sort of Gladstonian sort of liberalism, where based on sound public finances, or you can use the approach after the Second World War, which effectively was to use inflation as a way of running down the debt. And by the mid-70s, despite going to the IMF, actually our debt to national income was considerably lower than it was after the war. But inevitably at times like this, everybody focuses on macroeconomic policy. Actually, if we're going to pay for any of these things, in the end, it's microeconomic interventions which matter. Have we got the skills, the investment, the innovation systems in place which will enable the economy to grow? Because along with inflation, one of the great successes in the 1950s and 1960s was a higher rate of growth, which makes it far easier to pay for a bigger state.
Okay, we are now going to go to Phil Aldrich.
Thanks for your comments, everyone. It's been very interesting. I just wondered in terms of delivery, is it easier to use grants or to use the banking system, so state grants or the banks? And is it conceivable that the exit strategy in terms of the public finances and the level of debt could be managed through temporary tax rises? Or do you think this is going to be a sort of permanent shift in the size of the state in terms of the size of tax revenue taken by the state?
Just to add in quickly, that's Phil Aldrich at the Times, you forgot to say. So who wants to answer that first?
A temporary tax. That's what income tax was when it was introduced by Pitt. And it's still temporary, and all of the prefabs after the Second World War, some of which are still going strong, albeit a bit reclad. Look, let me do it briefly. I don't think you can talk about temporary taxes. The fact is, at some stage, this is going to have to be paid for. But to go back to a point that Nick Macpherson made, one of the best things the government can do at the moment is try and avoid the damage that will have to be paid for, or reduce the damage. And that's why I emphasized at the start the delivery of these policies, to make sure that people who get the money that they've been promised, the businesses get the money. You asked, well, should it be grants or should it be loans? I suppose you need a mixture of the two. The point I was really getting at is to make sure there are actually the people who can ensure that the loan is granted. Or the people that can ensure that stuff gets into supermarkets. And that's a logistical thing rather than some passing of policy and so on. And you keep emphasizing this point, but in the experience that we had when we had the fuel drivers, the fuel shortages in the beginning of the century, foot and mouth and so on, it is the delivery, actually getting people to do things, that's the crucial bit. And if we don't get that, then we'll pay a much heavier price than would otherwise be the case.
Nick, you want to respond?
Well, yeah, I mean, look, you're going to need grants and loans. It's a lot easier to use existing systems than invent new ones from scratch. But as you've seen with the building of the hospital in the Excel Centre, if the state really turns its mind to things, it can do it. In 1914, the Treasury printed a whole lot of banknotes in 3 days. Ration books were produced at very short notice. So it's a question of prioritisation more than anything else. I mean, coming back to the taxation issue, there was a really interesting debate after the First World War where a number of people advocated a capital once and for all way of dealing with the debt which had been accumulated. It didn't happen, but I do think we need a better debate about taxation, and the government can take the lead on that by acknowledging that there aren't simple solutions to these problems. In the end, public expenditure has to be paid for one way or the other.
So Juliet, could I make one comment on this, which is the whole point of having the national debt is that when you face a short-term crisis or emergency, you actually allow the national debt to go up. You don't suddenly impose much higher taxes in order to finance short-term demands. And there is a risk, I think, at present of thinking that because the size of the national debt may go up considerably, that means that the economic damage will, in the long term, be very great. Provided we listen to what Alistair has just said, which is to focus on the logistics and to make sure that we do not allow businesses to fail and collapse in this current crisis. The turnaround in GDP could be very rapid, and we may find that the long-run economic cost is actually pretty small and can be financed by what seems to be quite a large rise in national debt, but which spread over many years is actually relatively straightforward to finance. That's why the national debt is there. It's to smooth the tax burden that we have to impose on businesses and households. And if we can get the logistics right, the economic cost could actually be relatively small.
Okay, we are now going to go back to Tim Wallace.
Tim Wallace here at the Telegraph. Thanks very much. Sorry, the internet disappeared earlier on. I'm interested in this idea that we might need more international collaboration. Are we thinking of a new Marshall Plan? What could it look like, and who might pay for it? Thank you.
Well, I think both Gerald and I touched on this. Now, I was really thinking, going back to 2009, where one of the things that helped restore confidence was the fact that all countries, all the big economies, did exactly the same thing. They put money in to shore up their banking system, and critically, in the post-crisis months that followed, to put in place reflationary policies that stopped a recession becoming a depression. And the fact that everybody was doing it meant that no one country was picked off. It meant that people had confidence that everyone's working together. The problem you've got today is the response both on the health front, in terms of when we started telling people to self-isolate, in terms of testing, which I've mentioned, that has not been done in the same way. And I think if there was more coordination on that, or more cooperation, that would be helpful. And equally, in relation to the economic response, quite clearly, it will have to be tailored to the individual circumstances of individual countries. And I think here there's been a bit more encouragement in the sense that everybody's announced a package of one sort or another. But I think that, and also the messaging coming out of world leaders, the more people are making it clear that they're on the same thing, it affects confidence. And confidence matters, because it's not just a question of people going out and keeping economic activity going, but also the point that that both Nick Macpherson and Mervyn have made, that it's people's morale. If they think people are pulling together, so I'm not advocating who knows a Marshall Plan, though in today's circumstances I think it's difficult to see that happening actually. But who knows that some big measure like that wouldn't be appropriate a wee bit further down the road. But I can't overemphasize this. If we can get things sorted out better now, and don't get me wrong, there's a lot of good things have been done, but if we could execute them now, then, as Mervyn has said, we might save ourselves a lot of pain later on.
Just to reinforce that, I think the striking thing in 2009 and 2008 was the extent of international cooperation. I think in recent years we've seen far less cooperation internationally, partly because many countries in the G7 hold different views on the way forward. But if ever there was an opportunity to start reducing trade barriers and encourage freer trade, it's now.
Yeah. Gerard here, I would echo what Nick has said and Alistair Darling. One small thing is that I was very disappointed. Sorry.
Yeah, just make it quick because we're going to try.
Yeah. The idea of the G20 Secretariat, I think, needs to be raised. I was very disappointed on the eve of this crisis, the G20 meeting in Saudi. It was only the last sentence of the first paragraph that in passing they mentioned the virus. I think this idea in political terms of having a roaming G20 makes sense, but maybe to actually coordinate policy and to make sure things don't fall through the gap and that we learn the lessons from this crisis, maybe there should be a case for a G20 Secretariat, and who knows why wouldn't London want to host it? But I think that's another issue that should be raised in the future.
Okay, as I said, we're going to try and squeeze in 3 more questions. So keep everyone keep their answers brief. You don't all have to answer each question. And the first one is from Nikki Morgan.
So talking about delivery, which I think is absolutely right, Mervyn talked about having people potentially in bank branches, because obviously lending and approving loans is going to be part of this. And then Alistair talked about having people to approve the loans. The trouble with this crisis, of course, is that actually having people in branches is the one thing that public health people do not want. They don't want people going. So actually, is this an opportunity for fintech in terms of new ways of approving getting money to businesses. And I wonder if you think the banking sector is set up enough for this, and in particular, this issue about them asking for personal guarantees from directors for loans to SMEs. So are they just carrying on doing things in the way that they normally do? Or do you think our banks are prepared to be flexible enough and have got enough tech so that people aren't necessarily physically sitting there talking to customers, but are able to help them get money to their business?
So if I may, Nikki, respond to that. I don't think that the banking system has time now to think about fintech and all this. I think the management of the banking system needs to give very clear instructions to their staff. I see no reason why we shouldn't think of banks as part of the essential emergency system to keep the economy going. We're allowed to go into supermarkets. People can manage that. They have a queue outside. They have a limited number of people in the supermarket. We've learned to cope with that in a way that's compliant with the health restrictions. I see no reason why banks could not be open and comply with exactly the same sort of restrictions. And unless we find some practical mechanism, there may be others, but we have to do something to ensure that the schemes that have been announced can actually have the effect that they are designed to achieve. And I'm not sure if that's happening at present.
None of the others of you have any points?
Just to agree with Mervyn, I mean, a well-run bank will have a well-developed business continuity plan. And I know of at least one small bank which is very much open for business, working from home consistent with the restrictions. So it can be done, and it's down to the banking system to step up to the plate.
And it's a useful first step to just be able to speak to somebody, because they can say, yes, you qualify, or no, you don't, or yes, you qualify, but this is what you have to do. And, you know, I think most people would be quite happy to deal with their banks on that basis. You know, I think all of us are probably one step removed from that. All I would say is that I think the government has to get in there and find out what is actually happening on a day-to-day basis, because it, you know, it would seem clear that, you know, there's still quite a bit to be done to deliver it. But again, it needs to be things we can do, practical things we can do that can be done today rather than at some point in the future.
Yes, bank IT projects don't have the best track record. So we're now going to go to Vicky Price.
Hello. Well, on March the 11th, which seems like ages ago, the Chancellor, of course, had very ambitious infrastructure spending plans for the following years, and also all that levelling up that we heard about. Do you think that it's quite likely that in order to do something about the finances when we come out of this crisis, we do the simplest thing that we've always done, which is basically cut capital spending? And what will the implications of that be? Or is that one way you think that the Chancellor will react, or certainly the government will react when we get out of this? In other words, forget HS2, forget everything else that we said. We have to sort of deal with the finances at present.
Maybe Alistair, you could take that first.
Well, I have always said that the best thing the government could do is to concentrate on those projects that can be delivered quickly and without delay, and therefore smaller, more manageable projects always seem to me, I'm thinking in transport in particular, or housing, to be much more sensible than perhaps, you know, how should I put it, some of the more grandiose projects that may materialize in the next 20 or 30 years, but possibly not before that. So I would concentrate on what you can deliver now. It would be a very short-sighted to say, no, we're not going to do any of these things, because the problems that we had before March 11th are still here now. But for goodness sake, you know, I've said this before, I've announced projects in my time in government which still haven't been delivered. That especially applies to the largest ones. Concentrate on something that you can deliver that's almost shovel ready, and you can get going on it, and that would be my best advice to whoever's in charge at that time.
Yeah, if I could come back to Vicky on this, I don't think infrastructure should be, or it will be, the casualty of this. We've touched, all of us, on longer term lessons, building robustness into the health system. But in terms of economic policy, it is about delivering stronger economic growth, certainly, as Nick touched on, to actually start to reduce that debt to GDP ratio. And part of that stronger economic growth and raising our bar and raising our game has to be delivering on infrastructure and all the other I's: investment, innovation, and getting the incentive structure right and reducing the inequality. So infrastructure should not, and I don't think will not, suffer. And I hope it doesn't, obviously.
And maybe briefly from Nick, you might quite like to see HS2 finally scrapped.
Well, I'm in complete agreement with Alan on HS2 that I think it's expensive. I think it may well involve technology which will be obsolete by the time it's finally built. So again, I'm with Alistair. You want to prioritise projects which you can deliver quickly, which will make a real difference, i.e. those which have the biggest economic returns. HS2 doesn't have a very high return, but Vicky, let me assure you, I think that it's more important that we prioritise infrastructure more than ever. That may require the odd difficult decision on consumption, because one of the problems in Britain is not only the British people, but the politicians they elect are addicted to consumption, which is why, as a country, we tend to save less and invest less.
Okay, and we are going to squeeze in, oh, sorry, no, we are out of time. So you've escaped the last question. But thank you all very much to all of our panelists. Thank you to everyone for watching this first policy exchange webinar. I was going to say hopefully the first of many, but hopefully not, because hopefully we'll be able to do this in person or standing 2 meters apart very soon. So thank you all, and we will see you next time.